Hey everyone, and welcome to this week's edition of What's Driving Token Prices. I'm your host, Katie Talati, Director of Research at Arca. For those joining us for the first time, I'm responsible for identifying and analyzing digital asset and blockchain opportunities for Arca's funds. As part of our research, my team and I examine token prices and the market events that act as catalysts for price change. Based on our market research and market events over the past week, here are some notable token price moves and what we think drove these moves. As a reminder, this commentary is not intended to be investment advice, investment research, or an investment recommendation. Please consult your own professional for your own circumstances. Hey everyone, welcome to a new week. It has definitely been a busy one here. We have had a lot of go back and forth on whether the government shutdown is going to end, if that's going to affect asset prices. But as always, we are here to talk about tokens. So first up, I'm going to talk about a new project called Canton Network. So if you're not familiar, Canton Network is a layer 1 protocol. They launched their token CC on Monday for live trading. So the protocol has actually been live for just over a year now, and they focus kind of on privacy and interoperability features that are needed for banks, insurers, and asset managers and TradFi to use blockchain rails. The idea being that a lot of open source blockchain projects right now, they transmit all of the transactions on chain, and that's not necessarily something that a lot of traditional traditional asset managers in the space want. They want some sort of privacy feature. They want to have kind of more configurability in their asset transference projects. So Canton really has set out to offer that for these larger institutions. They have successfully onboarded a huge number of those institutions, including JP Morgan, Citi, Goldman Sachs, Barclays, and a ton of others that have reportedly deployed billions of dollars of tokenized RWA assets onto Canton's network. So since the launch, the CC token has traded down about 20%, as is typical of most of these kind of new token issues. And currently they are getting a $4.3 billion valuation. Okay, next we're going to talk about Lido. So Lido DAO is the leading Ethereum staking provider. They actually are the largest staker of Ethereum on the network. They released a government proposal yesterday for a buyback mechanism for the Lido token. So Lido, like many others, is a fairly solid cash producing project, and they've just had no real use case for their token except for governance to date. So the proposal outlines the creation of a buyback mechanism that essentially would purchase Lido back from the market using wrapped staked ETH, which is basically what Lido earns revenue in, because when you use their product, you stake ETH, and then you receive a liquid staking derivative called staked ETH in return. And so they take a cut of whatever the reward is. And so they're earning money, or they're essentially earning their revenue in that staked ETH. So the mechanism that they're creating is going to be one where they can basically repurchase Lido at only though under certain conditions. Specifically when ETH is above $3,000, these are all subject to change, but and then also when their annualized revenues are above $40 million, and that is also denominated in ETH, remember, because as I said, they take their fees in ETH. So when those conditions are met, about 50% of the revenue is going to be used to buy back the Lido token. So according to the proposal, the mechanism is probably going to be released in Q1 of 2026, as it's a little bit more complex to build out. For context, Lido made about $88 million in the past year, indicating that at that level, we would see buybacks of about $24 million of Lido tokens. Lido's up this week, 9.6% on this news. All right, last up, we're going to talk about Uniswap. They've been the talk of the town because they've also finally activated their fee switch. So you've probably heard me talk about this before, but Uniswap, they're the leading decentralized exchange and one of the first decentralized exchanges to really find a lot of success using the automated market maker model. So they finally released a proposal that essentially goes and activates this fee switch. This has been something, like I said, I've talked about a couple times before. They've kind of not really committed to doing the full fee switch, but that is now changing. So they released this joint proposal with the labs team, their labs division, and their foundation to turn this fee switch on. The proposal recommends that they're going to kind of slowly roll out the fees, first to their V2 pools, then V3 on Ethereum mainnet, and then they will start rolling it out to additional layer 2s where they're deployed, and then finally to alternate layer 1s. Fee tiers are going to be different depending on the version of the protocol and also pool type. So for example, if there's pools usually that are swapping only, different types of stable coins, those are pretty low fee because you're not really going to take a lot of slippage there. There's not a lot of risk for like a market maker to run a pool like that. So the team also promised that they're going to be burning about 100 million tokens out of treasury. So very definitely a nice commitment that they have made to the market. Doesn't necessarily impact though the kind of like circulating supply. And then they have also said that the labs team specifically, they are going to be removing a fee that they implemented on their front end about a year ago that collects 25 basis as a 25 basis fee on all trades conducted through the Uniswap front end. So that, like I said, that was introduced about a year ago. It wasn't very popular at the time because people were like, wow, like the labs division is just taking that money. They're not leaving anything for the token holders technically, and they're just taking that fee. So by doing so, or by taking this 25 basis fee away, they were really like focused on realigning the token holders with the equity holders and the labs team in the foundation. Many are really heralding this as a huge success since it's a massive change from the past few years in which Uniswap has largely ignored its token. Although we're not sure how the buyback and burn mechanism will go out, there's a lot of debate online about what are the exact volume numbers for Uniswap, especially since there are so many deployments of it. It's kind of difficult to track, but some estimates I've seen is that they are probably making around $72 million a year if they turn on, that they can redirect to that buy and burn. Uniswap is up 50% this week on this news, so clearly the market really did enjoy it. Okay, guys, thanks for tuning in. I hope you enjoyed our insights. Tune in again next Wednesday at 1 p.m. Pacific to hear what's driving token prices.